Good morning, good afternoon, depends on where you are, I guess. This is the All-Star Options Jam Session. I'm Sean McLaughlin, at Options Sean on Twitter X. Today's December 7th, 2023. Hope you're doing well. This is a quick little show where we review any action and positions that we have on in the All-Star Options service. We review trades that we've exited, either at a profit or a loss. We review stocks that we're updating our stops, positions we have on where we're updating our stops, and we briefly touch on new trades that we've put on since we last spoke. But before we jump into any of the charts, as always, I have to drop the old disclaimer here to make the lawyers happy. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn a little bit along the way from following my process. All right, so let's start like we always do at the top. A little high level of where we're at, kind of like the map to the market. I like to use the S&P 500. And as you can see, the rally that we've had off of the end of October lows has stuck. It's really just kind of consolidating sideways here, which really just feels to me, still feels incredibly bullish. It feels to me that the pain trade, I've been talking about the pain trade for weeks now. The pain trade still feels higher, and the fact that we're consolidating sideways just adds more credence to my feeling that the bears just are not winning. They're not catching any breaks here. The path of least resistance will be higher. When we start breaking higher, I don't know, but I want to be leaning long. That's the way I see it. Volatility index continues hanging out near the lows, 2-year lows, 3-year lows. Either way, very low readings for VIX, which, hey, big rallies off the low of VIX happen off the lows, right? Sure, but we can grind and stay low for a while here. That's the bet that I'm making, at least for the next month or so. So that's the high level. Let's talk about one trade that we've exited since we last spoke. This is DraftKings. This was a winner, but not the kind of winner we were hoping for, unfortunately. We were long December 35 calls that we paid $1.40 for back on June 28th. You can see right here. Soon after getting into this trade, it was looking pretty good, and then it consolidated, and that was frustrating. And then we had another leg higher, and I was feeling really good about this trade. Unfortunately, once we got into the month of December, which we are now, we had to start aggressively trailing a stop, which is my best practice when I'm holding in the money calls. I don't want to give too much back because theta is my enemy at that point. We did have a pullback, unfortunately, tripped up our stop loss level. I think 37 was the level I was looking at. We closed below 37 on the 4th, which was Monday. So I exited the trade near the open of trading on Tuesday. And I got 230 for my calls on the way out. So a profitable trade, but not the kind of profits we were hoping for. But hey, small profits are better than losses, right? So we'll take it. We are out of DraftKings. Maybe we'll get into it again later on. We'll see if it sets up again. This trade, Lindy, ticker LIN. We are currently in this trade, but I'm sharing a chart on this now because it's flirting with our stop loss level. We actually got into this trade not too long ago on the 27th of November. We bought April. We bought an April bull call spread. We bought the 420 calls and shorted the 450 calls. We paid $11.50 for this spread. 400 is my stop loss level. Now we traded below 400 intraday yesterday, but we closed just above it. In fact, this number here, 40.31, that was the closing price, I believe, yesterday. So according to my rules, I wait for a closing price. I know it traded below 400 intraday, but I wait for a closing price, and we closed above 400, so the position lived to fight another day. Unfortunately, today, again, it's back below 400, just barely. I'm looking at it now, it's 399.38. So we'll see if it hangs on. If it closes above 400 again today, then it'll live to fight another day. But if we do see it close below 400, then I will exit the trade on the next trading day and limit my losses here in this trade. Thankfully, this is a trade we got into not too long ago, so the losses are small at this point. I'll take quick losses any day. I love taking quick losses because it usually means there's still premium left in those options and I won't get hurt too bad. But Lind is on notice we're keeping a watch on that one, on Lindy. Is it Lind or Lindy? I don't know. Lin. All right. So that's all we have action-wise. Portfolio. We have a quick show this week, but we do have some updated stops that I want to bring your attention to. Steel Dynamics. This is a bull call spread. I thought, man, we were so close to getting out of our profit target last week. I mean, we're trying to sell this spread for $20. We bought a January 100, 130 call spread for $10 back on June 12th. We've been in this thing all for half of the year, since summer, early summer. And man, it's just been making us wait. And finally, it looked like we were going to hit our profit target last week. We did not. We are still in it, still holding. But in the meantime, I raised my stop. I'm raising my stop up to 110 now. So if 110 gets breached between now and expiration, we'll be able to exit the spread probably for close to what we paid, depending on how bad that breach is. But at 110, the spread will have $10 of intrinsic value in it, and we paid $10 for the spread. So if it breaks 110, I don't expect us to lose a whole lot on this trade. But either way, that's my line in the sand right now. Hopefully this stock finds its footing and rallies back and breaks above last week's highs, at which point we should hit our profit target. But Steel Dynamics, we moved our stop up to 110. And by the way, these are January options, so once we hit into January, we'll start even more aggressively trailing our stop if we need to, if we're still in the trade. All right, next up, Adobe. This is a bullish risk reversal that we have on. We're short the June 460 puts, and we use those proceeds to buy the June 700 calls. We have a net credit embedded in this trade right now. We collected at $1 the day we put the trade on. We did not have a stop, or we did have a stop when we initially put the trade on, but I'm raising my stop now. I'm raising my stop to 570. I don't want to see Adobe lose 570. If it does, then I will exit this trade. Shouldn't be much of a loss, if any. But that's our stop loss level, and that's really just a chart level, right? Like if we're below 570, this breakout that I think is happening is probably not happening, or at least I'm early on it. And I want out. So just updating that stop on Adobe. So far, so good, though. Trade is working well for us. Let's hope it continues doing that. Progressive, ticker PGR. This is a bull call spread we got into in early November. We bought the May 160 calls short of the May 200 calls for $11. It's slowly going our way. I wish it would go our way a little bit more. But so far, so good. No reason to panic, but I am raising my stop loss level up to 155. So that's the new level. If we break below 155, that's my signal to cut the trade and get out. So PGR, stop updated to 155. Finally, Coinbase. We have a bull call spread on in Coinbase. This is one of those hard trades I've been talking about for weeks now. One of the ones that's really been working for us. Back on November 10th, we bought the April 100, 150 bull call spread that we paid $11 for. And as you can see, this trade has very much worked our way. 160, above 160 is the level we're looking to take profits on this trade. We're not there, obviously, but we're heading in the right direction. But either way, I'm raising my stop up to 110, which kind of corresponds with the previous rally highs back in July. July, it met some resistance. In fact, even if you go back into 2022, that level, that 115 level was resistance. But what do we know about technical analysis? What was once formerly resistance oftentimes becomes support. So I'm hoping that level becomes support. That's why I'm putting my stop at 110. If we're below 110, I don't like this trade anymore, and we'll get out. Maybe we'll get out for a profit. It'll be close. Right at 110, we'll have $10 of intrinsic value in that spread. So either way, it won't be a large loss. But 110 is the stop in Coinbase. Let's hope this one keeps going. All right. For the rest of this, I've got 3 new trades we've put on since we last spoke last week. If you guys are All-Star Options subscribers, you have access to all the trade plans for these trades. If you go to allstarcharts.com, go to the members section, go to the options section, you'll find the trade plans for these 3 trades. We give you all the details. We give you why we're in the trade, how we're trading it, where our stop loss level is, and how we're taking profits. We lay all that out on all these trade plans. But I will say that all three of these trades we've put on since we last spoke are all bullish bets. The first one, EDU, that's a Chinese online education company, I believe. Datadog, that's a software play. We're bullish on Datadog, doing a little bit of a software catch-up trade. And speaking of catch-up trades, KeyBank. We love KeyBank for a lot of reasons. Number one, we love that gap to be filled. Number two, we like regional banks here as a catch-up trade. There's a few more, but that's enough for now. But those are the trades we've entered this week. Again, go to the website to get all the details on those trades. If you don't have access to that stuff, please shoot us an email, info@allstarcharts.com. We'll be happy to get you hooked up with all the trade plans at All Star Options. That's it for me this week, folks. Have a great rest of your week. Have a great weekend. We'll be back next week. Until then, take care. We'll see you next time.